கொரோனா இரண்டாம் அலை நாட்டில் தீவிரமடைந்துள்ள நிலையில் ரிசர்வ் வங்கி கவர்னர் திரு சக்திகாந்ததாஸ் காணொலி மூலம் நாட்டு மக்களுக்கு உரையாற்றி வருகிறார். அதன் நேரடி காட்சிகளை இப்போது பார்க்கலாம்.
Of society and business right down to the smallest and the most vulnerable. While doing so, our admiration and gratitude goes out to the brave citizens of our nation, to our doctors, healthcare and medical staff, police and law enforcement agencies, and to other authorities who battle the second surge selflessly and tirelessly and have been at the front line for more than a year now. Their services to our nations are now needed more than ever. The quarantine facilities of the Reserve Bank of India continue to operate with more than 250 RBI personnel and service providers away from their homes to ensure continuity of various segments of financial markets and RBI operations. Since the pandemic began, I have on several occasions expressed my genuine faith in India's resilience and capacity to overcome all odds. To quote Mahatma Gandhi, my faith is brightest in the midst of impenetrable darkness. And these are very inspirational words, not just for us in RBI, but I think everyone in this country. Over a year now, we have struggled to free ourselves from the pandemic's deadly grip. Between mid-September and February, as a country, we did manage to lower infections at a time when the rest of the world was reeling under the malevolent surges of the virus. This time around, we have to marshal our resources and fight it again with renewed vigor, ignited by the determination to overcome and to return to normalcy and sound health. Before I set out the measures that the Reserve Bank is proposing to undertake as part of the first part of a calibrated and comprehensive strategy against the pandemic, let me reflect on the macroeconomic and financial conditions that prevail, so that the context in which today's measures are being taken can be appreciated. The global economy is exhibiting incipient signs of recovery as countries renew their tryst with growth, supported by monetary and fiscal stimulus. Still, activity remains uneven across countries and sectors. The outlook is highly uncertain and clouded with downside risks. In April 21, the International Monetary Fund, IMF, revised up its global growth projections for 2021 to 6% from 5.5% projected in their January forecast, on the assumption that vaccines would be available in advanced economies and in some emerging market economies by the summer of 2021 and in most other countries by the second half of 22. World merchandise trade maintained its recent uptrend, growing by 5.4% in February 21 on a year-on-year basis. Consumer price inflation, CPI inflation, remains benign for major advanced economies. However, in a few EMEs, it persists above targets on account of firming global food and commodity prices. Global financial markets regained buoyancy in April on vaccine optimism after bouts of volatility in February and March, followed by corrections. Moving to domestic developments, aggregate supply conditions are underpinned by the resilience of the agriculture sector. The record food grains production and buffer stocks in 2020-21 provide food security and support to other sectors of the economy in the form of rural demand, employment, and agricultural inputs and supplies, including for exports. The forecast of a normal monsoon by the Indian Meteorological Department, IMD, is expected to sustain rural demand and overall output in 21-22, while also having soothing impact on inflation pressures. Aggregate demand conditions, particularly in contact-intensive services, are likely to see a temporary dip, depending on how the COVID situation unfolds. With restrictions and containment measures being localized and targeted businesses and households are learning to adapt. And this is something which has been very well noticed over the last year. Even with local containment measures, businesses, small businesses, and the big businesses, big and small and medium, I think everybody has learned how to survive and how to do business in an environment of containment, in an environment when there are physical restrictions, or rather restrictions on physical movement. With restrictions and containment measures being localized and targeted, that's what I was alluding to. With restrictions and containment measures being localized and targeted, businesses and households are learning to adopt. Consequently, the dent to aggregate demand is expected to be moderate in comparison to a year ago. Reports suggest that the disruption in manufacturing units so far is minimal. Consumption demand is holding up, with sales of consumer goods rising in double digits in January to March, and average daily electricity generation up by 40% year-on-year in the month of April. Rail freight has registered growth of over 76% year-on-year in April. Toll collections in April suggest that mobility has declined, but quite unlike the abrupt halt in mobility during April last year. Registration of automobiles in April 21 has shown some moderation compared to March. The tractor segment, however, continues its robust pace. The Purchasing Managers Index, that is PMI for manufacturing, continues in expansion mode at 55.5 in April compared to 55.4 in the preceding month, that is March. Overall, the high-frequency indicators are emitting mixed signals. The RBI will closely and continuously monitor all incoming data to assess on a real-time basis the impact of the second wave on macroeconomic and financial conditions. CPI inflation eased up to 5.5% in March 21 from 5% in February, on the back of a pickup in food as well as fuel inflation, while core inflation remained elevated. High-frequency food prices data for April 21 from the Department of Consumer Affairs, Government of India, suggests further softening of prices of cereals and key vegetables, while price pressures in pulses and edible oils remain. Price of petrol and diesel registered some moderation in April. Manufacturing and services PMIs, along with rising WPI inflation, show a persistence of input price pressures. The May 12 release of National Statistics Office will throw more light on inflation developments. Going forward, a normal southwest monsoon, as forecast by the IMD, should help contain food price pressures, especially in cereals and pulses. The buildup in input price pressures across sectors, driven in part by elevated global commodity prices, remain a concern. The inflation trajectory over the rest of the year will be shaped by the COVID-19 infections and the impact of localized containment measures on supply chains and logistics. But even at this time, in the run-up to the next MPC, when our teams are analyzing the various incoming data, and as I said, we are monitoring them on a real-time basis, we do not expect any broad deviation from the projections which we made in our April MPC, but you will have to wait for our MPC statement, which is due in the first week of June. In the external sector, India's merchandise exports and imports rose sharply in March of this year. For the year 2020-21 as a whole, the merchandise trade deficit shrank to $98.6 billion from $161 billion a year ago. Preliminary data released by the Ministry of Commerce and Industry, Government of India, indicate that India's merchandise exports and imports continue to witness broad-based, robust growth performance even in April 21. The current account balance, which had been recording surplus from January 2020 through September 2020, flipped and turned into slender deficit of 0.2% of GDP in third quarter of 2021. Foreign exchange reserves were at 588 billion US dollars on 30th April 21. This gives us the confidence to deal with global spillovers. Domestic financial conditions remained easy on abundant surplus system liquidity. The average daily net liquidity absorption under the Liquidity Adjustment Facility, that is LAF, was at rupees 5.8 lakh crore in April 21. The first auction of GSAP 1.0 conducted on 15th April 21 for a notified amount of rupees 25,000 crores elicited an enthusiastic response, as reflected in the bid cover ratio of 4.1. GSAP has generated softening bias in GSEC yields, which has continued since then. And as I have explained in the MPC statement, the GSAP is contributing to softening of GSEC yields, which in turn contributes to softening of the corporate bond yields and the private sector borrowing in the market.